Right now, something is unfolding that most XRP holders were not prepared for, and if you're watching this, you are already ahead of the majority of the market. Because what just happened, this sudden narrative tying Trump, Melania, and a broader market crash together has created a wave of panic across crypto and especially among XRP holders. But here's the reality that no one is clearly explaining. This moment might not be the end, it might actually be the setup. Welcome back to XRP On Moon, the channel where we break down what's really happening behind the headlines and give you the deeper perspective that most investors completely miss. If you care about XRP and your position in this market, then you need to stay focused right now more than ever. The current situation is being painted as a collapse, a dramatic turning point driven by political noise and emotional reactions. Social media is filled with fear, people are talking about exits, and many retail investors are starting to believe that this is the moment everything falls apart. But experienced market participants know something very important. Markets don't crash simply because of headlines. They move because of liquidity, positioning, and strategy. And when fear becomes this loud, it usually signals something else is happening beneath the surface. This is not the first time we've seen political figures or major narratives used as catalysts for market reactions. It's a pattern, and those who recognize it don't panic, they observe. XRP in particular is in a very unique position during times like this. Unlike most cryptocurrencies that are purely driven by speculation, XRP has always been connected to a much bigger vision involving global finance, cross-border payments, and institutional integration. That doesn't make it immune to volatility, but it does mean that its long-term trajectory is influenced by factors that go far beyond short-term panic. So when a sudden "it's over" narrative starts spreading, especially tied to powerful names like Trump and Melania, you have to question whether this is organic fear or something amplified to create a reaction. Because here's the truth that most people don't realize in the moment. Fear is one of the most powerful tools in the market. When prices drop quickly and narratives turn negative, it creates pressure. That pressure forces people to make emotional decisions. They sell not because of data, not because of fundamentals, but because of uncertainty. And uncertainty is exactly where large players thrive. Smart money doesn't chase hype. They wait for fear. They wait for moments like this, when retail investors are confused, uncertain, and ready to exit positions at a loss. That's when accumulation quietly begins. If you look back at previous cycles, not just in XRP, but across the entire crypto market, the biggest moves have always come after periods of extreme doubt. When everyone feels confident, the upside is often limited. But when the majority believes it's over, that's when opportunities start forming. And right now, the sentiment around XRP is shifting into that exact zone. People are questioning everything. They're second-guessing their decisions. And that emotional instability is exactly what creates the conditions for a potential reversal. Now, this doesn't mean that the market will instantly bounce back or that there's no risk involved. Volatility cuts both ways, and external factors, including political developments, can absolutely impact short-term price action. But what matters is how you interpret these moments. Do you see chaos and react emotionally, or do you step back and analyze what's really happening? Because from a broader perspective, this kind of sharp reaction often signals a reset, not a conclusion. It shakes out weak hands, redistributes positions, and sets the stage for the next phase. So when you hear people saying, "it's over," you have to ask yourself a simple question. Over for who? For those who entered without a plan and are now driven by fear, it might be. But for those who understand market cycles, who recognize how narratives are used, and who stay focused on the bigger picture, this could be one of the most important moments to pay attention. Because what looks like a breakdown on the surface can sometimes be the foundation of the next major move. Now let's go deeper into what's actually driving this situation. Because the surface level narrative about Trump, Melania, and a sudden market crash is only a small piece of a much bigger puzzle. What you're seeing right now is not just a reaction, it's a chain reaction. And in markets, especially crypto, chain reactions are often engineered or at the very least amplified to create maximum emotional impact. The timing of this narrative is critical. It didn't appear during stability, it didn't emerge when confidence was high, it showed up exactly when the market was already vulnerable. That alone should make you pause and think, because in financial markets, timing is never random. When influential names like Trump enter the conversation, even indirectly, it brings attention from outside the crypto space. Suddenly, people who don't usually follow XRP or digital assets start reacting. Media outlets pick up the story, social platforms push it harder, and within hours, a localized concern turns into a widespread belief that something major has broken. But here's the key detail most people overlook: attention does not equal truth. Just because something is being talked about everywhere doesn't mean it reflects what is actually happening behind the scenes. In fact, in many cases, the louder the narrative becomes, the more it benefits those operating quietly in the background. This is where market structure comes into play. XRP, like other major assets, operates within liquidity zones. These are areas where large buy and sell orders are concentrated. When fear enters the market, price tends to move aggressively toward these zones, not because the asset has suddenly lost all value, but because liquidity is being targeted. It's like a magnet. Panic selling fuels downward momentum, triggering stop losses, forcing liquidations, and creating a cascade effect. And while retail investors are reacting to headlines, institutions and experienced traders are watching these liquidity levels with precision. Think about it this way: if you were a large player looking to accumulate XRP at better prices, would you buy when everyone is confident and prices are rising? Or would you wait for a moment of fear when sellers are desperate? The answer is obvious, and that's exactly why moments like this exist. They create opportunity for those with patience and capital. The market doesn't reward emotion, it rewards positioning. And right now, positioning is quietly shifting. Another important layer to understand is how narratives evolve. At first, it starts with uncertainty, then it turns into fear. Then comes confirmation bias, where people begin searching for information that supports the idea that it's over. You'll notice more negative headlines, more bearish predictions, and more voices claiming that XRP is finished. But this phase is often where the narrative reaches its peak intensity. It feels convincing because it's everywhere, but in reality, it's often the final stage before sentiment begins to shift again. XRP holders who have been in the market for a while recognize this pattern. They've seen how quickly sentiment can flip. One week, the market is filled with doubt, and the next it's driven by optimism. The difference between those who benefit and those who don't usually comes down to how they react during these transition periods. Do they follow the crowd, or do they step back and analyze the structure? There's also something else happening that isn't immediately visible: capital rotation. When fear spikes in one area of the market, money doesn't just disappear, it moves. It shifts between assets, sectors, and strategies. Some of it exits temporarily, but a significant portion looks for new entry points. XRP, because of its unique positioning and history of explosive moves, often becomes a target during these rotations. But here's the catch: it doesn't happen when everyone expects it. It happens when attention is elsewhere, when confidence is low, and when the majority has already stepped aside. This is why understanding the difference between price action and value is so important. Price is what you see in the moment. It's reactive, emotional, and often misleading. Value, on the other hand, is based on long-term potential, utility, and adoption. And those factors don't disappear overnight because of a sudden narrative. They remain even when the market temporarily ignores them. So as this situation continues to unfold, the real question isn't whether the market is reacting. It clearly is. The real question is whether this reaction is justified, or if it's being exaggerated to create opportunity for those who understand the game. Because once you start looking at it from that perspective, the entire situation begins to look very different. Now, this is the stage where everything starts to separate the emotional investors from the strategic ones. Because while most people are still reacting to headlines and panic-driven narratives, experienced XRP holders are watching something completely different. They're not focused on what people are saying. They're focused on what the market is doing. And right now, the signals coming from the market are far more important than any story involving Trump, MELANIA, or sudden crash speculation. One of the first things smart money looks at during moments like this is price behavior around key levels. Not just whether price is going up or down, but how it's moving. Is it dropping aggressively and continuing without support? Or is it showing signs of absorption where selling pressure is being quietly bought up? This detail is critical. Because in true breakdown scenarios, price doesn't hesitate. It collapses with momentum and struggles to recover. But in accumulation phases, you often see sharp drops, followed by stabilization, consolidation, and subtle signs that buyers are stepping in without making it obvious. And this is exactly where many XRP holders get caught off guard. They expect accumulation to look bullish, to feel safe, to come with positive news. But in reality, accumulation often feels uncomfortable. It happens when sentiment is negative, when confidence is low, and when most people are too uncertain to act. That discomfort is not a warning sign, it's part of the process. It's what keeps the majority out while positions are being built quietly in the background. Another major signal that experienced investors watch is volume. Not the kind of volume that comes with hype and excitement, but the kind that appears during fear. When price drops and volume increases significantly, it can indicate that large transactions are taking place. Now, that doesn't automatically mean bullish or bearish. It depends on context. But when you combine high volume with price stabilization, it often suggests that selling pressure is being absorbed rather than accelerating. In simple terms, someone is buying what others are selling. Then there's the concept of market structure. This is where things become even more interesting. Markets move in patterns, cycles of expansion, correction, consolidation, and continuation. Right now, XRP appears to be in a critical transition phase. The recent volatility has disrupted short-term structure, but it hasn't necessarily invalidated the bigger picture. And this is where most people make a mistake. They zoom in too much. They focus on short-term price movements and ignore the broader trend. But the bigger trend is what ultimately defines where the market is heading. If this were truly the end for XRP, you would expect to see a complete breakdown in structure across multiple timeframes. You would see sustained weakness, lack of recovery, and declining interest. But that's not fully what we're seeing. Instead, we're seeing sharp reactions, followed by attempts to stabilize. That doesn't confirm a reversal yet, but it also doesn't confirm a collapse. It places the market in a zone of decision, and that's where things get powerful. Because zones of decision are where major moves are born. This is the phase where uncertainty is highest, where narratives are conflicting, and where the majority hesitates. And hesitation creates inefficiency. It creates gaps between perception and reality, and those gaps are exactly where opportunity exists. Smart XRP holders understand this. They don't need certainty, they need probability. They look for signs that suggest one outcome is becoming more likely than another, and they position themselves accordingly. There's also a psychological layer here that cannot be ignored. Right now, many investors are dealing with doubt. They're questioning their decisions, wondering if they missed something or if they should exit before it gets worse. That internal conflict is powerful. It drives action, but it also creates vulnerability, because when decisions are driven by fear rather than analysis, they tend to happen at the worst possible time. And that's why patience becomes one of the most valuable assets during moments like this. Not blind patience, not ignoring risk, but calculated patience. The ability to wait, to observe, and to act only when the signals align. Because in markets, timing is everything. Being early can feel the same as being wrong, and being late can mean missing the move entirely. The goal is not perfection, it's positioning. So as this situation continues to evolve, understand that what you're witnessing right now is not just volatility, it's a process of redistribution, of testing levels, of shifting sentiment, and of preparing for what comes next. Whether that next move is up or down will depend on how these signals develop, but one thing is certain: the market is not as simple as the current narrative suggests. Now, this is where everything starts to come together, because at this stage, the market is no longer just reacting, it's deciding. And for XRP holders, this is one of the most critical moments, because what happens next will likely define the direction for the coming weeks and possibly even months. The noise around Trump, MELANIA, and the so-called crash has already done its job. It has created confusion, shaken confidence, and forced a large portion of the market into uncertainty. But now the focus shifts from reaction to outcome, and this is where strategic thinking becomes essential. There are essentially two main scenarios unfolding from here, and understanding both is what separates reactive investors from prepared ones. The first scenario is that what we are witnessing right now is a classic accumulation phase disguised as a breakdown. In this case, the sharp drop, the negative sentiment, and the overwhelming fear are all part of a larger setup designed to redistribute XRP from weak hands to strong hands. Price may continue to move sideways or even dip slightly lower to test patience further, but underneath the surface, positions are being built. This kind of structure often leads to explosive moves later, because once accumulation is complete, there is very little resistance left on the upside. In this scenario, the key signs to watch are stability after volatility, higher lows forming quietly, and decreasing selling pressure over time. The market won't suddenly turn bullish with loud announcements. It will shift gradually. And by the time the majority realizes what's happening, a significant portion of the move may have already happened. This is why accumulation phases are so powerful. They reward those who can stay patient during uncertainty. The second scenario is more aggressive and requires a different mindset. This is the possibility that the market has not yet completed its correction, and another leg down is still pending. In this case, the current stabilization is temporary, and price could break lower before finding a true bottom. This kind of move is often referred to as a final shakeout, where the last wave of sellers exits the market before a real reversal begins. It's fast, it's uncomfortable, and it's designed to push out anyone who was still holding on with doubt. Now, here's the important part. Both scenarios can look very similar in the short term. That's what makes this phase so challenging. The market doesn't clearly announce which path it's taking. Instead, it gives subtle clues. And those clues only become clear to those who are paying attention without emotional bias. This is why flexibility is so important right now. Being locked into one expectation, whether bullish or bearish, can be dangerous. The goal is not to predict perfectly, but to adapt as new information appears. For XRP holders, this means shifting from a reactive mindset to a strategic one instead of asking, is it over? The better question is, what is the market showing me right now? Because the answer to that question changes everything. If the market starts to hold key levels and build structure, that leans toward accumulation. If it breaks down with increasing momentum and no support, that leans toward continuation of the correction. But until one of those paths becomes clear, the market remains in a decision zone. Another factor to consider is time. Most people underestimate how long these phases can last. They expect immediate results. They want the market to either recover instantly or crash quickly so they can move on. But real market transitions don't work like that. They take time, they test patience, they create frustration, and that frustration is part of the process. It's what causes people to give up just before clarity arrives. This is also where discipline plays a huge role. Emotional decisions are often impulsive and inconsistent. Strategic decisions, on the other hand, are based on a plan. Whether someone is holding long-term, scaling positions, or waiting for confirmation, the key is consistency. Because without a plan, every move in the market feels like a threat. And when everything feels like a threat, it becomes almost impossible to make clear decisions. Right now, XRP is not just moving through volatility, it's moving through a defining phase. A phase where narratives are loud, signals are subtle, and outcomes are still forming. And this is exactly where experienced investors gain their edge. Not by predicting the future perfectly, but by staying grounded while others become reactive. Because once this phase ends, and it will end, the market will move with clarity. It always does. The only question is who will still be positioned when that clarity arrives. Now, as we come to the final part, everything we've discussed starts to connect into one clear reality. This moment is not just about a headline, not just about Trump, Melania, or a sudden wave of panic. It's about how you, as an XRP holder, choose to respond when the market is at its most uncertain, because in the end, markets don't reward those who react the fastest. They reward those who think the clearest. Right now, XRP is sitting in a position where emotion and opportunity are colliding. On one side, you have fear-driven narratives telling you that it's over, that the crash signals the end, that exiting is the safest move. On the other side, you have a deeper layer of market behavior suggesting that this could be a transition phase, a moment where positions are quietly shifting and the groundwork for the next move is being built. And the truth is, both perspectives exist at the same time. That's what makes this moment so powerful and at the same time so dangerous. Because the biggest risk right now is not volatility, it's misinterpretation. If you misread fear as finality, You might exit at the exact moment the market is preparing to reverse. But if you ignore real weakness and assume everything is bullish, you could hold through unnecessary downside. This is why balance is everything. The most effective XRP holders are not blindly optimistic, and they're not constantly fearful. They operate in between. They observe, they adapt, and they make decisions based on evolving information, not fixed beliefs. One of the most important principles you can carry forward from this situation is simple but incredibly powerful. The market is always testing you. It tests your patience, your discipline, and your ability to stay rational under pressure. And right now, XRP holders are being tested in a major way. The noise is loud, the narratives are convincing, and the pressure to act is high, but not acting impulsively. That in itself is a decision. And often it's the most valuable one. As you move forward, it becomes less about trying to predict every move and more about managing your position with clarity. That means understanding your own strategy. Are you here for the long term based on XRP's potential in global finance? Or are you trading short-term movements based on technical setups? Because those are two completely different approaches, and mixing them leads to confusion. Clarity in your approach removes a lot of the emotional weight that comes with moments like this. It's also important to accept that uncertainty is part of the game. There will never be a moment where everything is perfectly clear before a big move happens. If it were, everyone would take advantage of it and the opportunity would disappear. Instead, opportunities exist because uncertainty exists. And those who learn how to operate within that uncertainty are the ones who consistently come out ahead over time. What we're seeing right now with XRP is not the end of a story, it's a chapter filled with tension, doubt, and shifting narratives. But chapters like this have appeared before in different forms, and each time they've led to moments that define the market in a major way. Whether this becomes a launching point or a deeper correction will depend on how the current structure resolves, but either way, this phase is shaping what comes next. So instead of asking, is it over? A better question to carry with you is, what is this moment preparing me for? Because when you start thinking like that, you move from being reactive to being strategic. And that shift alone can completely change your results in this market. At the end of the day, XRP remains one of the most closely watched assets in crypto, not just because of its price, but because of what it represents. And moments like this, where uncertainty is high and narratives are extreme, are often the moments that matter most. Before you make any decision, take a step back, clear the noise, and focus on the bigger picture, because the market will continue to move with or without your emotions. The only thing you truly control is how you respond to it. And finally, a quick but important note. This content is for informational and educational purposes only and should not be considered financial advice. The crypto market is highly volatile and involves risk. And every decision you make should be based on your own research, your own financial situation, and your own level of risk tolerance. Never invest more than you can afford to lose, and always approach the market with a clear and informed mindset. Stay sharp, stay patient, and most importantly, stay in control.